Morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 9th of March 2011. Just going to be starting with the Euro against US dollar on our CTC strategy template. Have a look at the daily time frame. Just zoom out. Draw my trend lines. My support and resistance levels. So, as it stands now, I've got two very strong ones in the shape of excuse me, the resistance level that we saw 2 days prior on, I think it was Monday, and then you would have seen the resistance level a couple of weeks back in early Feb. That's where we are now in terms of direction. You'll note we've come from a high point and we've seen two days of selling, and the Asian market open has seen further downside movement. This has taken us back to a previous low area. CT is still extended and we're still above the trend line, so trend direction is still bullish. However, what we're seeing now is a consolidation of a previous breakout. So will we see a support at 13.85, which was a previous resistance level? So previous resistance becoming new support, and then a continuation because the trend lines are there. Okay, that's what we ideally want to see. Let's have a look at the intraday. You'll notice yesterday the pair broke and fell right down to the 200 period moving average and found support, and then bounced up during the latter part of the US session trading, and then as we progress to the Asian market opening, we saw price revert back to the downside, and now we've seen it retest that 200 period moving average. Will this, we got up until, if you look at the daily time frame, we got until 13.8500 as a support area long term. So 200 periods move is there relatively, so be aware of that. You'll notice we still have swing lows. Okay, that's the major swing low, and then we've seen a pullback from this level down to here. It's pulled back and reverted. Now we're trading around the 38.2% fib area. Also a nice little bouncy area. Things tend to happen around 38.2% fib areas, and are we going to see another one today? If this 200 period moving average is very strong and we do see a support here around here, then we should see price revert back to the upside and at least attempt 39,200 this morning. Okay, but as long as the longer it stays above the 200 period moving average or above 13.8, the all-time long-term support area at 13.8500, then we could see further progression to the upside. CTC, however, on our smaller time frames are giving us a sell. So all we need now for this to be a genuine sell is obviously closing below 13.85, and we could see further downside movement. It's just too close to call on previous support to get into a trade once it's close below the 200 period moving average on this time frame. We could see it just bounce on the 13.8500 and then just push back to the upside. So CTCs are negative on our intraday time frames and long on our major time frames. Just be aware of that, okay? So needs to close and trade lower, in my eyes, below the 13.850 mark, which is down here. We are now trading around the 8.5 mark, so there is pips to be made to the downside. All we need to see, if you want to see a quick scalp to the downside, is a close lower than this support area. We're looking at, I think it is a 30-minute, yes. So a close below 13.880, because you can see now what's happening is we're having a squeeze, and then you could definitely attempt to get some pips to the downside. Be aware though, and this is the reason why I talk about it on an hourly chart, we had that 200 period, that very strong 200 period moving average on an hourly chart. Got to break that. So trade wise, you don't have much now in terms of pips return. Very important to understand that. Okay, so be aware of it, guys, and do your due diligence before trading this pair. Ideally, we want to see a definite break below 13,850 for further downside movement today. However, a nice strong bounce on 13,850 or 13,860-ish could see further progression to the upside, because on the daily we're now reaching a previous resistance level, which will become a new support, hopefully, because the trend direction is in that favor. Okay guys, that's Euro. I'll be relaxed with sterling against US dollar. Okay, up in front of me we have the UK sterling or cable against US dollar. Let's have a look at the daily time frame. This is a very interesting one now. I mentioned yesterday that if we saw price close below the 20 period moving average, you're wondering why, on a long term, we could see further progression to the downside. This is why, because you'll notice for the best part of this year, price has been, well, the moving average in particular has actually been helping this pair move further to the upside. Look at this 20 period moving average. Beautiful support area, further support here in early or late January, further support in mid-February, further support in late February, and yesterday we had a close for the first time below, and now the Asian market has failed to close higher than the 20 period moving average. Not a good sign, because the trend has now been broken, i.e. the uptrend in particular, and a moving average which has acted as a previous support line for a long period of time this year. So, bit of a negative signal there, wouldn't you think? If things tend to go our way, then we should be looking at the next swing, or the previous swing to the upside, here roughly around the 1600 mark, because we've had both support and resistance around this area. Just don't know about the 1611 mark to start with. Okay, as things go, the next one below that would obviously be the 1600 mark. Very strong resistance for a number of days, and then a breakout, and then a nice strong support for a number of days going forward. So these two areas, yeah, would definitely be on our books. Let's have a look at intro. CTC is still well extended. Okay, looking at the intraday, you can see we're in a holding pattern. You look for the hourly, for example, we're trading below all the moving averages, and we are retempting a support level, a very strong one. You'll notice that we had a bounce midday yesterday, and then Asian market we saw further selling, but a bounce again, and then a reattempt of that area at 6 AM GMT, and we've got another bounce. This is on a hourly chart. So if this remains, you'll notice also that the swings are now in a squeeze pattern. Look for the breakout, guys. CTC is in our favor. Okay, things aren't looking great on a daily time frame, so we should see further progression. Where's the progression likely to be? On a 4-hour, if we do get a breakout of this holding pattern here, then you'll notice, oops, let me just see if I can get this right. We had previous resistance, and now we've got support. Break of this would see further extensions, and we would look at the 200 period moving average, or around the 1610 or 1609.50 mark as our next target. Why? Because we've been there before. We're now swing low, swing low, swing low, break lower, gotta be there, at least to that area. Okay. And, if I'm not mistaken, a break of the trend has occurred for this pair. Swing up, breakout, pull back, smack, no. Do we see further continuation to the downside? Okay, CTC is in our favor. Don't trade against the trend when the trend is down, negative. 4-hour, trend is negative. 30 minute, negative. Look, CTC is negative. We've got swing lows. We're now testing that. If it breaks this trend line, different story. It's a different story altogether. See, breakout here. Pull back, continuation. We're seeing another pause. Yeah, around about 1450. Break higher or stays above this, then we've got to see a break and close higher than this consolidation. This consolidation period here being 16,1650. Which will take it above the two smaller intraday moving averages, i.e. your 20 and 50, it closes higher than this, then we got to look upside. Upside first target would be around the 16,1850 mark. Close higher than that, next target would be this prior high here, just below the 16,2100 mark. Break higher than that, where is it likely to be? The 200 period moving average and previous support at 1624. See how I put it all together? But be aware, we are on a negative trend, and if we don't see favoritism for break upside or of this trend to start with, then we should see further extensions to the downside. Be very, very careful of fake outs, stuff like this happening down here, where price moves. Everybody gets in thinking it's going long, and then it closes, bang, below that, and it just sucker punches everybody in and then pulls everybody to the downside. Okay, so you want a definite confirmation break. And what's price action between here and here? Not much. Take away your spreads, you're still trading less than 20 pips. Just be aware of that, okay? This is no fly zone in my eyes. Just be very, very careful. This is where people get sucked in and taken for a ride. Be aware that we're trading on a daily below a 20 period moving average for the first time in a long time, guys. That's telling you. It's got to do a lot of work now to be to show us that the sentiment is still favourite. And even then, it's got to go back up over this trend line and then move. It could just bounce down here to 16, 12 and just go sideways for a while. See, momentum on this pair is pretty much gone sideways. Look at that. Instead of seeing highs than the previous one, this high is still higher, but it's flat. See, we've gone to some sort of consolidation pattern, holding pattern. Be aware of that, okay? That's it for sterling against US dollar. I'll be back against US dollar Swiss franc. Okay, next up, US dollar against Swiss franc. Daily time frame to see where we are in relative to the entire, or the chart layout. You can see we broke below 935 and we traded lower at 933 ish. Pair is now broken higher than that, okay, but hasn't really progressed even further. Between 933 and 935 is in my eyes a no trade zone. Excuse me, guys. Okay, so nice bullish up candle on a daily for the US dollar against Swiss franc yesterday. This candle taking out all of this analysis, pretty much. And now what we've done is we've now run into the 20 period moving average plus the underside of support around the 9350 mark. So what do we need? We need obviously a close higher than that to start with, to confirm that we can see further direction to the upside. Why? Well, we can see we're in an extended downtrend for one, and all we're seeing is just lower swing lows bar the resistance level here, but you can see momentum is down. CTC is pretty much red, so we don't want to be looking for potential upsell unless we're getting that indication on our intraday charts. But on our daily, we're now fighting the odds with previous support. So are we seeing a clear breakout, pullback, strong resistance level, and then revert to the downside? Okay, that's why I say this is a no trade zone, because we've been here before. Oops. You can see how strong that area is. Okay, it needs to show conviction that it's staying above here. So ideally a close above, in my eyes, especially on a daily, in my eyes, anything closing higher than 940 would be perfect, because then by then it's giving you a nice breakout, consolidation, it's found support to this area, and then we should be looking for further extensions to the upside. Let's have a look at our intraday charts. As we go into the intraday, you can see the CTC is, however, starting to show a lot of blue. Everything's in our favor. Here again, consolidation. This consolidation is coming around because we're now testing the underside of a very strong support level, prior support level. Okay. Resistance, resistance, Asian market resistance. 3 attempts and failure to break higher. We need it to close above. First thing today, if it's going to progress any higher, because you can see we had higher swing highs, it needs to close higher than 9365. Doesn't, look for extensions to the downside. Why? Because we're on a negative trend anyway to start with. So extensions to the downside would oversee anything else because of that. Okay, so where are we likely to see a break? Well, we've got a very strong support and resistance in this area here, about the 9350 mark. If we could stay above the 9350 mark, we could see a further a reattempt of this 9365 area. If it breaks below this 9350, expect it to fall down to at least this trend line again. Why? Because we've had prior resistance and support in that area, and this trend line for this time frame is in play. Swing, swing high, swing high. See how I'm putting it all together, guys? So if it breaks below here, it has a last bit of empty space here for you to make 5, 10, 15, 20. 25, take the 5 away, give the 5 back to the market, you made your 20 pips. Are you happy? Yes, that's all you want. Okay, be aware of that. So, in layman's terms, got to stay above this area here, 9350, and the 50 period moving average now is moving up to help it on a 30-minute time frame. Stays above that area, then we want to see it close higher than the Asian market highs, because that's the highest it's been in this time frame. So in order for it to progress higher, it needs to close higher to confirm that the momentum's still to the upside. If not, we should be looking for possible consolidation, and the longer it goes along this area here, the possibility of pullback are strong because it's failing to break a very significant daily long-term resistance area. Just putting my analysis together very, very quickly. Okay, so if we break this level here, we'll be breaking through the 50 period moving average by then, and then there's empty space between 935 and 9315, and there's enough here to take you 20 pips if it fails to trade any higher. Okay, be aware of that. Hey guys, that's US dollar Swiss franc. I'll be back next with the last pair of the day, the US dollar Japanese yen. Okay, and the last pair today, the 9th of March, is the US dollar against Japanese yen. So, look at the daily time frame. We know straight away that we have prior bounces on a support level to the upside. This is very much a consolidation pattern on a very negative pair. You can see we come from some serious heights around the 90.50.5 mark, and we're now trading down here, the lows. So we're just in consolidation, and ideally 83.50 would be our next target because we are in this holding pattern. It's almost a channel, a squeezing channel. Clear indication of further upside movement. Well, for one thing on the daily, we've had yesterday's trading took it higher than all the moving averages, our smaller term moving averages, i.e. 20 and 50, and by doing so, it's now hammered out a bottom. You can see this is trading higher than all of this. I mentioned it had to trade above that and close higher to confirm further upside movements, and sure enough, we saw a bit of a pullback yesterday before the Asian market opened, but it's closed higher, and the indication is the Asian market's also open higher, and we're trading higher as we speak. So the momentum on intraday is going to be pushing higher. See, we've created, the price action has created another swing. So this swing is higher than that, and that's where we've come from. Are we going to see a repeat of what happened in early Feb? See that? Support, swing, higher. Support, swing, higher. Resistance level, draw your trend line. That's ideally our next target. Okay. There's a bit of resistance in between at 8300. As you can see, it's tested it because we've had resistance here and support in the past. Be aware of that. That could factor in. But if you trade about 8300, there's nice empty space between that area and there. Okay. That's just looking at daily time frame, guys. See how much I was able to look at and see on a daily time frame without actually looking at my other 5 screens. It's so important being able to look at that, putting support, resistance, trend lines, etc., and have an idea of what price is likely to do, because it just makes your life so much easier by looking at the intraday. Because now I know straight away, heads up, swing higher on a daily, momentum is there. Even though we're in a downtrend, momentum's to the upside for us. Why? Because we're in a holding pattern. So CTC should be blue intraday because of all the upside movement. Hell yeah, look at it. 4 hours, blue, hourly, blue, 30 minutes, 15 minutes, 5, all blue. Look at the trend on this. Trend direction. Perfect. Swing higher, swing higher, swing higher. All the swings are higher. Very, very important. See that? And then when I say, well, that's the highest it's been, great, so put that high in. Straight away, we know we have to break and close higher than that, above this area here, to see further extensions. Failure to do so, no long-term trade. Look for possible short. Okay, where else do we have? Resistance, breakout, consolidation. So straight away we know on our hourly time frame that price is in an uptrend. Okay, it's in a holding pattern now during the Asian market. Not much is happening for this pair on the Asian market, so we know that's pretty much at loggerheads. So no trade zone is this box between 82.75 or 82.77 and 82.93. No trade zone. Why? Because it's doing nothing. You don't want to trade nothing because we're not making nothing. That's the way I look at it. Why trade nothing? You had to make profits, not trade nothing. Okay, so we box it. Box it. Put a nice box. Bang. Stick it in a box. I'm living in a box. Okay, so we know straight away, in an uptrend, price could possibly bounce on this uptrend. Okay, so we know it cannot close lower than 92.75. By doing so, it'll close lower than the trend line, the uptrend, and this previous resistance level. It will fail to meet a support level now, and if done so, we should look at prior supports or swings. There you have them. Nice one set up. This is what happens when you have a nice trend. So, break of this box at the downside. Failure to trade higher than 82.95 would see a possible trade to the 82.63 mark. Failure to find support there would see 82.50 being retested. Failure to find support there, we'll see 82.30. Failure to find support there, we're in serious problems, and we're looking at the 8200 mark. Look at that. That's an hourly chart, guys. Bang. Same thing on a. See the swings to the upside. See how I'm putting this all together, guys. Very, very easy. Prior resistance, new support. Stays above 82.75. There's huge likelihood of further extensions to the upside because we're in an uptrend. CTC is up. All the price needs to do now is break a previous high to confirm the momentum is still with us, and we should still look for progressions to the upside. It's that simple. Failure to do so, failure to close above 82.95, we don't trade. There's no trade. If it does break above 82.95, hell yeah. Let's look at it. But be aware that 8300 on a daily, we've had a resistance level. Quite a lot of it. And it's a round number. Be aware of that. So, if we start seeing consolidation on a smaller time frame for a long period of time today, it's because we're trading thereabouts around a strong prior resistance level. So, when the longer goes sideways, there's a good likelihood we could see a pullback. And a pullback would surmount, if you think about it, this is the start of this trend. We could see, if you wanted to, a retracement area. If you do a retracement, draw you from the start of the trend to the high of this trend, and these are the potential pullback. 61.8 will take us right back to the 200 period moving average. 38.2 happens quite regularly to the 82.50 mark. You can see how these areas are on price support and resistance. How weird is that? Okay, see, I'm putting it all together. So as it stands now, price cannot break lower than 82.75. It's got to hold its ground above that area to confirm further extensions to the upside, and it's got to deal with this area here at 8300 because it's a strong resistance level long term. So the closer we get to it, we're going to find more consolidation. A nice breakout to the upside would have to confirm a break and close above 8300 for us to even contemplate seeing further extensions into the US session. Otherwise, we're just going to see it going sideways, consolidating, where we're not making any money, i.e. this box area, and just for it. So you can put a a alert below the 82.75 mark for short, and put an alert above 82.95 for the breakout. Just be aware if you get the trigger of the breakout at 82.95 that the 8300 mark is not too far off. Okay, that's it for today, guys. I shall see you tomorrow. Keep your trading simple. Take your pips when they present themselves. Make sure your money management is correct. And last but most importantly, trade serenely.